Welcome to Trends with Benefits, a podcast by vanEck with a forward-looking perspective. We explore new ways of thinking about the markets, investing, work, and life. Here's your host, Ed Lopez.
Welcome to Trends with Benefits. Today I'm speaking with Angus Shillington, Deputy Portfolio Manager for the Emerging Markets Equity Strategy at vanEck. And we'll be primarily talking about India, specifically the digital transformation of India. Welcome, Angus.
Hey, Ed, thanks for having me on.
You know, you've been at vanEck, I think, as long as I have. Since 2009? Is that right?
That's about right, yeah.
What has struck you about working at vanEck? How would you describe it to people?
I think it's a really interesting organization that has the sort of DNA and the forward-looking culture has really sprung ahead. And I think in the last 2 or 3 years, certainly as we've gone into COVID, it really feels like the right place at the right time, as it always felt in the past. But specifically now, we're nimble, we're adaptable, we're thoughtful, we're always looking ahead. And it just feels like a business of this time, as it may have felt a little before its time when I first joined.
Yeah. And your role on a day-to-day basis is basically covering stocks in the emerging market space and Asia in particular?
That's basically it. So our strategy is straight on the vanEck base plate, very forward-looking. We think sort of 3 to 5 years ahead in terms of finding businesses that are growing on long-term structural kind of compounding trends, which is very unique to EM. And our idea is that if you can find a business that has reliable growth and you can research as much as possible of the risk out of it, you get to harvest that growth over time, albeit with emerging market volatility.
Yeah, you got to work with that volatility, just kind of given the nature of the investing. Yeah,
absolutely. But I mean, that's the idea. If you find the businesses, and we get asked the question all the time of why are you sitting in New York? And the world works kind of in sequence. The US tends to do most things first, and I think it'll come out in this conversation. And we sort of feel we have front row seats to innovation. And to some extent, we have the cheat codes to what's going to happen elsewhere in the world. You tend to find that, as we found with the internet, and I think a big part of this conversation is that if it happened here first, you tend to see the sequence of events and you can spot them elsewhere.
Yeah. Well, speaking of being in New York, you're not always in New York. I think you're on the road quite a bit, aren't you? Generally, maybe before COVID.
In the past, it was a sort of 100 to 200,000 miles a year. A big part of what we do is, and I think a big part of the value is being able to take the experience of our successes and failures of the past and overlay them on future investments. And a big part of that is sitting down and looking someone in the eye face to face and asking the tough questions about their business and their vision. I think, again, something that is very sort of universal to equity investment globally is that great people, great managements have a good chance of being responsible for great businesses. So a big part of that is making sure that we can go see them on the ground in a place where they feel comfortable to tell their stories. And then we're able to pass through that and figure out if it's something we want to allocate capital to. So yeah, it's things have ground down to a halt in the last 18 months. And it doesn't look like certainly China, possibly India, are going to open up for a while.
When was the last time you were in India?
God, I think it was the November before COVID. So yeah, it's coming up to 2 years from this November.
Well, let's move over to India a little bit. One thing I noted, kind of being on the ETF space, is there's a handful of India-focused ETFs. They've seen some pretty good returns over the last 1 year. Seen an average returns of over 47% through August of 2021. And kind of depending on the different flavor of exposure one wanted, it ranged anywhere from 13% to 67%. Is India an area that investors should be paying attention to? Should it be on their list of places to invest?
I mean, anytime you have a conversation about India, a general conversation about India, I think you've got to point out it's like a parallel universe. It's a different place, and the sort of dispersion of possible outcomes, whether they're valuation ranges or success failures of certain businesses, are extreme. So we've had some great performance in India over the last 12 months. Some of it is base effect, some of it is cyclicality, but a lot of it is multiples blowing out to pretty expensive ranges, which to some extent will tell you why foreigners are finding it more difficult to engage with the valuations, and why the broader kind of index fund type ETF opportunities are probably easier to make. And I say that because if somebody said, would you like to invest in India? My answer is yes, which is a sort of ETF, yes. If somebody said to me, would you like to invest in one of the top 10 businesses? I would struggle to get my head around the valuation. So they're very different sort of questions. And the flows that have really been driving the performance and the multiples are very much domestically driven. They've got quite sophisticated savings products. They call them SIPs, which is, I think, it stands for systematic investment product. So kind of similar to a 401k, but a little different. But that kind of money has just been flowing in, personal money. There's a very sort of unsophisticated bond market as well. So you tend to find savings are more likely to end up in equity. So you've got this sort of this constant SIP flow, and then on top of that, you have the discretionary flow, which has been very positive coming out of COVID. And domestic savings tend to end up in domestic assets.
Are there other themes that are driving the market outside of just kind of a rebound from COVID? Are there other thematic areas that you've been watching?
I think, yeah. I mean, I think it's we've been seeing it globally. The US, China, all over Europe. The idea that COVID has driven digitization very, very, very much deeper than it would have been without COVID. And I mean, what I mean by that is that we ask managements, what year do you think you're in now in terms of your business plan? Are we actually in 2021, or are we closer to 24, 25, 26? And the answer is towards the latter. So India began digitizing in earnest, I want to say 2018, 2019. But the more pressure was put on supply chains, logistics, communication by stay-at-home mandates, the more likely analog businesses, which were the majority of what was going on in places like India, were driven to look for digital solutions. And when you look at sort of intention surveys from halfway through COVID, the biggest intention was to invest individually in a smartphone.
Was there something that changed in the economy or certain regulations that kind of spurred on more of the digitization?
Yeah, no, I mean, India was interesting because it's digitization is about solving bottlenecks. If you take the US, the bottlenecks were all technology. So, you had to have Intel and you had to have Microsoft before you could have Apple and 3G, 4G, 5G cloud. If you think that 10 years ago, 5 years ago, we had Apple and we had cloud and we had chips and we had cell phone technology, the bottleneck India had was really twofold. One, you really didn't know who anybody was. Very poor ID mechanisms. And two, affordability. So how do you get a device into the hands of somebody who can really only afford to pay $2, $3, $4 a month on a mass market basis, because scale is going to be everything. And that then the sort of piece of how do you drive that intention? Because one of the most interesting things about technology, specifically in emerging, is at any given time, it's easier to do what you're currently doing, i.e. the analog version, than it is to switch to the digital version. So you need somehow to drive that conversion. I remember sitting back there in like 2012, 2013, there was a gentleman, he was a founder of Infosys, who was one of the big IT firms there, and he wanted to do a give back project. And his idea was, to try and get on top of corruption, he would do a basically biometric thumbprint type thing and try and get every individual to be ID'd. And if the idea was if you could ID each individual digitally, then you could start to transfer money, you could start to do very simple KYC, you could start to get people into banks and really start moving along this idea of a cash economy that was just rife with corruption. But he was ultimately very successful with that. Now 1.2 billion people in India have an ID, a digital ID, which is almost better than you're finding elsewhere. This to India answers a question of who, where at the same time in the US, we're sort of getting our heads around asking the question where, which was GPS. So if you can answer the question who, then you can start to do some really interesting stuff. And really what followed that was a bunch of legislation, including GST, which was goods and services tax, which was forcing people to own a bank account, which meant you could start to move from cash to the digital economy. And really, once you'd started to structure those things, you could then drop in logistics, which is a wildly important part of digitization and general progress. You could drop in internet. And then the ultimate code breaker was these guys at Reliance Technology, which is an oil and gas. It's the biggest oil refiner in the world. And their real core skill set is just pure hardcore, heavy industrial execution, long duration type projects. And they stood back and said, look, there's 1.3 to 5 billion people in India. If we can get 500 to 600 million on a newly built cell phone network, we can start to drop in prices at that scale that are very affordable. So they set out to build a network from scratch, which nobody believed was even possible. It went from 15 cell networks in India down to now 3. These guys now have their 600 million. They're now giving data profitably to nearly 600 million people. And that vision then created a funnel, which just put cell phones and smartphones, but very cheap smartphones, in the hands of people who previously didn't have them, and set up the capability to do all of the stuff that we now know in the US. But the businesses that are dropping in India are scaled for numbers. So instead of trying to make large margins from a small number of people, they make tiny margins from a breathtaking number of people. And the other thing that was, I think, needed to happen was, we dropped in a Prime Minister, Modi, who really had an objective to crush lack of transparency and to crush corruption. So all of those things together came very quickly to get us to where we were 18 months ago. And now COVID has really pushed that to the next level.
Modi implemented the demonetization in 2016, kind of surprised everybody. And you talked about the goods and services tax. I've read different things where people have reviewed that and found that it was so-so, maybe not that successful. According to the government, it was very successful. But do you think all of that together, along with the digitization, has helped further the implementation of digitization across India?
Yeah, I think, it's funny. It's sort of back to the sort of status quo that you never, especially in a country, as poor and as sort of satellite as India, to really just try and drill down into each individual thing and say, that worked or that didn't work. There's no sort of binary impact of one individual thing. I think just taken together is what has created where we are now. The intention of GST, super smart. I think if you measure it by, what was the immediate increase in tax, pretty negligible. But when you measure it in where are we now, 5 or 6 years later, the idea of GST was to federalize taxation, something that was extremely local before. So the idea was, if a guy jumped in a truck in Delhi, right, he had to make a delivery to Chennai. He was paying 2 different sets of taxes. But if he drove back in an empty truck, he could pretend he didn't deliver and therefore he wouldn't pay tax. Anyway, this stuff is nonsense. So, it takes a lot of time to sort of right size that. And what really needs to happen is, you need to aggregate trucking and instead of having, 20 million different independently owned trucks, you want to have 100 national organizations who can improve efficiency. So there's a very long tail in a lot of these stuff, and it's sort of tempting to look at individual government policy anywhere and say, did it work? It was implemented yesterday, did it work today? The answer is it didn't work in a day, but you're seeing the long tail of that now start to play out in a way that I think is going to be super interesting and solve. One of India's biggest problems is a very large young population. And, one of the most staggering pieces of data out of India is just very simply, given the breadth of the sort of bottom of the age pyramid, the economy has to absorb 1 million people each month in order to keep employment static. So, when you sort of think about what has happened and the reforms and the various government objectives put together with digitization, you should get a nice fiscal lift from, improved taxation, improved real economy activity, which can be noted in tax. Then you start to get employment, you start to get the ability to do big infrastructure projects. So there's a nice long tail in that, and that's a long answer to your simple question. But in isolation, some of those people have been very negative on some of the reforms. I think taken in aggregate, they've been extremely successful.
Reliance, you talked about Reliance being an energy company that has, I guess, I don't know, have they transformed into a tech company, to a communications company? How would you look at them now?
Such an interesting question for this very moment, because right now they don't screen well from an ESG perspective. I would argue that they're lifting the most people out of poverty, enabling the most healthcare education on the planet. They're doing probably as much ESG as anybody, if not more, at a higher pace, but they're still categorized as an energy business, and they're still covered by energy analysts. And so one of the core theses when we first decided to invest in Reliance was there's a huge multiple uplift from transitioning from an oil and gas analyst to an internet analyst, because the oil and gas analyst will only ever want to pay an EV/EBITDA of X or a book multiple of Y, whereas the internet analyst, it's limitless to the amount they'll pay for a business that has a funnel to 600 million people and can really cross-sell them anything. They've recently sold some of their oil and gas business to Saudi Aramco, or they're in the middle of selling it. They will execute that shortly, but I think they will separate out that business into consumer and into the energy relatively soon, which will give you better price discovery. Because what they've built on top of that now is, and this is actually a really interesting point to something we laugh about, but we consider a lot, which is this concept of last mover advantage. if you're the last mover to get a technology, or let's just call it straight internet or mobile internet, you have a bunch of things. One, you have coincident technology, so you're able to drop in, anything from cloud to smartphones, straight off the bat, and that has a really interesting outcome in terms of consumers who don't have legacy behaviors. So they immediately have a smartphone and they immediately start to create behaviors around that smartphone without having the analog version in the middle, whether it's a relationship with a doctor or a relationship with an accountant. They go straight from not having an accountant to having an app without having the central guy. So there's a lot of interesting stuff that goes around that. But also you have basically proof of life or proof of concept of business models that have worked elsewhere in the world, and you can sort of leapfrog into the next generation. China is a great example because they're miles ahead on a lot of consumer internet. The early generation Alibaba was pretty much a sort of eBay/Amazon. And what came after that, which was Pinduoduo, which was this super interesting business model of moving very far upstream in terms of fresh produce and food. The problem is the two have huge friction against each other. Reliance have basically done everything. So they basically have set themselves up, inside of every farm to access every tomato, to move it down their own logistics platforms into their distribution centers and out through either their digital model, which is called Geomart, or out through their Reliance retail outlets. So, these guys have dropped in infrastructure that enables them to go miles upstream and miles downstream, not only to create better outcomes for consumers, but also to create better outcomes for themselves. So, you end up, rather than, 5 or 6 different businesses discovering how to do 5 or 6 different things and then ultimately playing off against each other, you find that the first mover is the guy who's able to actually populate pretty much every space, which of course in and of itself will end up creating antitrust issues, but that's a problem for tomorrow.
That's interesting when you talk about being able to leapfrog some legacy issues, or the legacy process, or just kind of dealing with. You don't have to deal with the analog aspect. Basically, you have a bunch of people that are going to become digitally native right off the bat. And then you talked about the younger demographic, and you initially started saying one of the problems they have, but is that also a potential opportunity for India, just given the youth of the demographics there?
Absolutely. This idea of being digitally native is, I think we're starting to really understand it in the US. This is stuff that it makes no sense to us. But, if you grew up only knowing Google, or if you grew up only knowing digital transactions, there is no room, or there will be no room in your life for the other. And I think it's something that, when you think longer duration in terms of investments, you realize how disruptive this whole thing is. And developing countries generally being later to the digital game are in a much better place to have more positive outcomes on a sort of societal basis, partly because of the demographic and partly because of the timing. And I think you tend to think about digitization as e-commerce, but actually when you think about a lot of the problems that are being faced in places like India, that digitization actually is a societal upshift in terms of education, healthcare. And one of the most important ones is as you cram down logistics costs, instead of, the most stupid, some guy carrying 3 eggs in his pocket to market and selling them and 2 of them break and all he's got is 1, that guy can deliver them into a very sophisticated logistics network. You get prices coming crushing down where, the price of a banana in Nairobi is the same as the price of a banana in New York. That makes no sense. We tend to sort of think as US analysts or people living in the US that, God, I got to get in there and invest in the Amazon of India. But actually what's happening, India specifically, because of the demographics, 1, because of the pure size of the population, 2, and because of the disruptible analog nature of that economy, the opportunity is incredibly broad. And what was most interesting about it, and I remember writing about this after that meeting with Nandan and Nikani, thinking, hold on, this is about to go crazy, is that there are very few businesses existing in India right now that can transition to a digital framework. So, for example, India is uniquely, it doesn't have multi-line retail. So there's no Home Depot or there's no like Walmart, right? Everything was branded. And the guy who won with branding was the guy, 1, who got a sort of political leg up to be able to get the licenses. But 2, he was the guy who had the most stores or the most, physical outlets. Now that stuff is irrelevant because if you give, 600-700 million people digital shelf space on their phone, they don't need a store. Everything can be dropped. So it's a very broad opportunity, but the businesses that are currently the large businesses in India are probably not going to be the guys who win.
Have you seen some interesting business models that are focusing on the digital side of things?
Yes, and very, very unique to India and solving very specific problems in India. We've been very close to a company that's private. I think they're listing later on this year, called Delivery, a really clever name. But their idea was to come at logistics in a very asset-light format. So they wanted to make it a pure software-driven solution rather than the idea in the US that we've just got used to the fact that FedEx will deliver a letter from you over there to me over here, and I'll get it tomorrow morning, and they have a bunch of planes. The delivery guys, everything is about training AI to do what needs to be done the cheapest. So if we learn that you, Ed, you're fine walking 300 yards to go pick it up over there, then that becomes part of the delivery mechanism. But the idea is that they came from sort of point one where there are no addresses in India. There's no such a thing, or there has been no such a thing as address. Ed would live in the White House beside the hospital across the road from the school, right? That was Ed's address. So, over time, they had to solve the problems of, proximate addresses to drop in geo coordinates. And once you've solved the geo coordinates, you can start to really move toward longer term logistics. But once you've solved that simple longer term logistics, how do you do it for a price that people can afford? How do you solve the last mile piece? And they crack the code. They can do it for $1 anywhere in India on a 3-day basis. So I say once you crack those codes, the bottleneck is just broken, and the genie's out of the bottle, and consumers win, and the old analog businesses get crushed. So taking it back to your question about GST, if you didn't have GST and the ability to sell something from one state to another state and only pay one set of taxes, you wouldn't have where you are right now. So, there are some incredible models, but, a lot of these models are, they've got to navigate around some pretty complex stuff like dialectics. So there's hundreds of different dialects in India. How do you figure out how to solve for those problems? And, they're just not something that Amazon is going to do. But the other thing, which is sort of interesting, and we got ahead of it, is this idea of sort of digital sovereignty. And it's very much a later stage concept, but, once you start building in someone like India, you realize I don't want to let any foreigners in to steal my data, to offshore my profitability. So the idea is you want to keep everything local. So not only are you've got local entrepreneurs solving for local problems, you also have this sort of regulatory ring fence keeping big foreign firms out because of data privacy and because they want to be able to monetize that revenue as well.
So I imagine that a lot of these businesses that are developing in India are going to be very locally focused. But do you envision that there will be any global benefits to India's digitization, companies that would be helping global logistics or global IT?
That's a good question. I mean, I think, logically, if somebody figures out how to do something radically cheaper, that they would end up busting out of their borders. You look at ByteDance in China, or you look at some of the simple manufacturing models of pharmaceuticals in India, they've become global models because they've managed to solve problems with a much lower cost base and export those processes internationally. So it would seem likely that's a process that's in motion. And again, it's back to this sort of legacy mindset of heavy balance sheets and trucks and planes, and that stuff isn't necessarily important anymore. It's, if you're running a logistics network, it's important you have a handful of trucks that you run at 100% capacity, and then you have swing capacity that you contract in and out and make sure that you're always running at optimized levels. So I think, you're seeing them pop up all over the place, but these software-driven business models without legacy cost and legacy management structures should be international in nature.
What are the obstacles, do you think, to realizing the full potential of digitization? I mean, I would just remember being in India many years ago now, like 2009, and saw all this construction and a lot of work going on and new schools being built. And somebody told me, well, those new schools are great, but the parents aren't going to let the kids go because they need them to work in the fields or what have you. Do you find there will be obstacles to adoption that can't be overcome?
I don't think so. I mean, again, it's if you take the sort of analog of what's happened in the rest of the world, I mean, politics, you ultimately get to a place we're at in China right now, and to some extent, probably we are in the US, which is that there needs to be a reset between the sort of power dynamics between internet platforms and consumers and governments. But that seems like it's a long way off. The big issue, I think, there was just transitioning away from the cash economy, and like anywhere. If you pay cash, you don't pay tax, and there's a lot of suspicion around getting yourself into the formal economy and being tracked. But once If you're three guys selling bananas off a cart in Mumbai and one guy figures out that instead of walking 2 hours that way to buy them for one, to sell them for 1.3, he can land them for 50 and sell them for everybody else's cash cost, disrupt everyone around him. It just moves through very quickly, and the way that software is developing to be very, very granular, that a guy in a corner shop can now drop in a very simple software stack that manages inventories, his online ordering, delivery. This stuff is impossible to stop. If you don't want to do it on this street corner and this guy does do it, you're out of business. So it tends to sort of drive itself that it's kind of unstoppable from a pure sort of efficiency and competitive background. And sooner or later, sort of the laws of Darwinism take over, and you're forced to become more efficient. And that's a great thing. And at the very basic level in India, it crushes all the bad behavior that sort of goes around corruption. I feel like at a sort of headline level, it's kind of unstoppable. I'm sure there's sort of individual issues that will sort of crop up, but it's a very positive outcome.
You mentioned corruption. How do you think about corruption going forward and the scope of digitization?
Corruption is only, I don't say it's only possible, but it's mostly possible if with cash, right? So it was very easy for politicians to get hordes of cash. Now that's really what demonetization did. Was the guy who had $1 million under his bed in cash, he just had to torch it. It was worthless. So if you take away the motivation if you reduce the success rate of bad behavior at the same time as the penalties stay reasonably stiff, then you'll tend to find it naturally rolls off, and those guys tend towards trying to find some kind of productive way to live life, right? And again, if it's cash passing from hand to hand to hand, somebody's always going to clip a coupon off it for facilitation, but corruption happens everywhere, and digitization is just all about destroying friction. One of the most interesting things in India is that after they did this UID digital identity thing, the country, not an individual, but the country set up one of the most sophisticated immediate payment mechanisms. It's called UPI. It's a government-run payment platform, and it's immediate. It's kind of like Venmo, and most transactions are now done on that platform. So once you can start to move cash around in a way that the beneficiary benefits from 100% of what they do, it becomes more and more difficult to sort of lousy stuff, which is obviously more prevalent in super poor economies.
What's your take relative, say, China versus India in terms of investment return potential?
I would go with India. I think that the demographics are a very powerful long-term trend. China's going into a little bit of a sort of demographic issue, which I'm sure they'll navigate around reasonably well. But just from a pure highest magnitude of friction that can be disrupted, India is really interesting right now. Just in terms of where we've seen the rest of the world go. I think in terms of predictability and in terms of sort of the macro, I think there's some very interesting businesses in China, and that's what we do. But from a sort of broad country perspective, the future in India looks super interesting. There's a couple of things that could mess it up, but broadly speaking, I think it's definitely a macro and if the companies get it right, micro story that's very investable.
What's one long-term trend you see playing out over the next year or several years?
I love demographics. It's sort of one of my little things. But Gen Z is a frightening concept. Gen Z, I believe, will earn somewhere in the region of $30 to $35 trillion annual income by 2030. That's about 1/3 of global income. That's like 9 years away. These guys have never known life without Google. They're super socially active at a click, remember? So we think about our kids as having opinions. That these are kids with opinions that can vote for their opinions very quickly. They're digitally native. 20% of them watch terrestrial TV. These guys don't care about credit cards, and 9 out of 10 of them live in developing countries, right? We're still sort of struggling with issues in the US that US politicians are 2 decades older than the average citizen. That seems completely wrong to me. We're about to have, I think, a big downshift in decision making by age. I think it's going to be wild. Something I read recently, like 70% of Gen Z would consider a lab grown diamond as an engagement ring. Right? So yeah, interesting stuff.
That's fascinating. And you said 9 out of 10 live in developing nations?
9 out of 10 live in developing countries. That's correct. Big chunk in India.
All right. So you ready to play Trend or Fad, our speed round segment?
Yes.
All right. Investor activism, trend or fad?
Trend.
CBDCs, central bank digital currencies, trend or fad?
Trend.
The metaverse, trend or fad?
Definitely trend.
And skinny jeans, trend or fad?
I got them on right now. I want to say trend, but for me, it's bad.
Yeah, I guess, so you say you're wearing them. I don't know about you, but going back into the office thinking about that, I'm going to need something not so skinny. Pajama jeans or something.
It's scary stuff. But it was funny. I mean, it was one of those things that, everyone has their thing they did during COVID. They bought themselves a piece of real estate or a piece of land or some gold. I bought a bunch of skinny jeans. So.
Oh.
Go figure.
As long as you keep yourself in shape.
Exactly.
Angus, this was awesome. Thank you very much. What's the best way for people to follow you or connect with you?
I'm on LinkedIn. I'm on Twitter. I literally just started to get Twitter ramped up. I think it's an awesome communication tool, and I'm late, and I admit I'm late, but yeah, those are the best ways.
Awesome. And thank you for tuning in to another episode of Trends with Benefits.
Thanks, Ed. It's a pleasure.